Hey everyone, thanks for joining AquaVest. This is a channel that is focused on water investing. So we talk about water stocks, individual company names, and water ETFs. Uh, in an age where investors are chasing a lot of trends as far as like crypto and tech, it's important to look at what's happening in the water sector. It's the world's most important resource. However, water scarcity is accelerating. Infrastructure is aging, and governments are pouring billions into water solutions. This creates opportunities for investors who are paying attention. In today's video, I'll cover 4 water stocks that are positioned to benefit from this trend in 2025 and beyond. We'll cover utilities offering dividends, technology companies revolutionizing water treatment, and diversified plays that give exposure to the entire sector. By the end of this video, you'll understand exactly how to add water investments to your portfolio and why this could be one of the smart moves that you make in terms of balancing your portfolio. All right, let's jump in. So before we get into specific stocks, let's understand why water investing is so compelling right now. First, the numbers are staggering. The World Bank estimates that global water demand will increase by 55% by 2050. Meanwhile, 2 billion people already lack access to safely managed drinking water at home. Climate change is making droughts more severe and unpredictable, while aging infrastructure in developed countries desperately need replacement. Here's where it gets interesting for investors. The American Water Works Association estimates that the U.S. alone needs $1 trillion in water infrastructure investment over the next 25 years. Globally, that figure jumps to $6.7 trillion according to the OECD. This isn't just about necessity. This is about profitability. Water utilities typically operate as monopolies in their region and provide stable, regulated returns. Water technology companies are seeing growth as municipalities and industries seek efficient solutions. And water scarcity is driving innovation in areas like desalination and water recycling. The beauty of water investing is that it combines multiple investment themes: infrastructure modernization, environmental sustainability, population growth, and technological innovation. It's defensive during economic downturns. People always need water, yet it offers growth potential when the sector transforms and evolves. So think of water like oil. It's extremely important, but with one key difference. There are no substitutes for water. Not all water stocks are created equal. There are 3 main categories to understand. Water utilities are the steady dividend players. These companies distribute water and treat wastewater for municipalities. They have yields between 2 and 4%, and they grow earnings at a modest but predictable rates. And then there's water technology. Companies have the highest growth potential. These businesses develop filtration systems, smart meters, leak detection, and water treatment chemicals. They are riding the wave of digital transformation and water management, and they invest a lot in R&D. They have patent portfolios and recurring revenue from service contracts. And then there's water infrastructure. These companies build and maintain the pipes, pumps, and treatment plants. They benefit from a lot of capital spending. They are global companies. They have geographic diversification and expertise in high growth areas like desalination. When evaluating any water stock, it's important to focus on these factors: market position, financial stability, and exposure to growth drivers like population growth, regulatory changes, and water scarcity. So let's get to the actual stocks. The stocks that we'll consider are American Water Works, Xylem, Veolia Environment, and Essential Utilities. So with American Water Works, this is the largest publicly traded water utility in the U.S., serving 14 million people across 24 states. What makes this stock special is their acquisition strategy. They're constantly acquiring companies, smaller utilities, and improving efficiency. They've raised their dividend for 13 consecutive years, currently yielding about 2.8%. This company is investing heavily in infrastructure replacement and digital technology. Their regulated utility business provides stable cash flows, while their market-based operations offer growth potential. Recent quarterly earnings showed 7% revenue growth, and management expects 5 to 7% annual earnings growth throughout 2028. There are risks, and these include regulatory changes and the capital-intensive nature of the business. But for those investors who are focused on dividends, this could be an interesting stock to take a look at. Next, we have Xylem. So Xylem, XYL is the ticker. Xylem is a pure play water technology company that's transforming how the world moves, treats, and analyzes water. They make everything from pumps and valves to smart water networks and analytical instruments. This gives them exposure to both infrastructure and digitization of water systems. What's interesting about Xylem is their recurring revenue model. So about 60% of their revenue comes from services, parts, and consumables, not just one-time equipment sales. They're also leaders in smart water solutions, helping utilities reduce water loss and improve efficiency. Recent results show strong momentum with organic revenue growth of 8% in Q2 2025. They're benefiting from increased infrastructure spending and growing demand for water efficiency solution. Their stock offers both a blend of growth and dividends with a current yield around 1.2%. The next stock is Veolia Environment. The ticker is VEOEY. This company is a global leader in water, waste, and energy management solutions, and they're based in France. They operate across Europe, the Americas, and globally, specializing in every phase of the water cycle. So we're talking resource management, production, treatment, recycling, infrastructure development, all aspects of the life cycle of water. In 2024, the company supplied drinking water to over 100 million people and managed nearly 4,000 drinking water plants and over 3,000 wastewater treatment facilities worldwide. So there's broad exposure here to global water infrastructure, technology, and services. They have a strong capital allocation policy and a sustainable dividend appealing to both income and growth investors. They do have some risks. Again, there's regulatory challenges and currency fluctuations due to its international footprint, but its scale balances across water, waste, and energy activities help buffer the volatility. So Veolia Environment stands out as a diversified, innovative water sector, large company with strong financials, a stable dividend, and clear leadership in sustainable infrastructure and technology. This is a solid choice for anyone interested in bringing a global water perspective to the portfolio. The last one we'll take a look at is Essential Utilities. The ticker is WTRG, formerly known as Aqua America. Essential Utilities serves about 5 million people across 10 states. What separates them is their aggressive acquisition strategy and their focus on operational efficiency. So they've done over 300 acquisitions in 20 years. They benefit from favorable regulation that allows them to earn returns on infrastructure investments. They're also expanding into natural gas distribution, which provides additional growth opportunities and diversification. Essential Utilities has increased its dividend for 30 consecutive years, making it what is termed a dividend aristocrat. The current yield is about 2.5%, and management expects 5 to 7% annual earnings growth. For investors wanting exposure to the water sector with a strong track record of dividend growth, WTRG is something worth considering. So before you rush to buy these stocks, let's talk about risk for a bit. Water investing isn't without challenges. Regulatory risk is significant, especially for utilities. Rate increases have to be approved by public utility commissions, and there's political pressure that can limit profitability at times. And sometimes economic downturns can delay infrastructure projects. So those companies that are focused on equipment and service can be impeded by some of these by economic downturns and policy decisions. Technology disruption is another consideration. There's new filtration methods or alternative water sources could disrupt existing business models, and climate change will bring opportunities and risk along these lines in terms of drought, increasing demand for water solution, but extreme weather can damage infrastructure. Currency risk also affects international operations in many water companies that have global exposure. So some of the companies that we talked about, they operate globally. They can be sensitive to interest rates and changes in currency since they're often viewed as bond alternatives. So the key here is diversifying across different types of water companies and geographic regions in order to have a full balance perspective of investing in water within your portfolio. So water investing is a compelling long-term investment. There is a combination of necessity, scarcity, and technology innovation that creates multiple paths to profits. Whether you prefer steady dividends of the utilities or the growth potential of tech companies, the diversification of an ETF, there are options to consider for every investor. So successful water investing requires a long-term perspective. This is definitely not your get rich quick play. This is something that's steady, sustainable, and could compound over time, especially when you're considering some of these names that have a high dividend yield. If you found this video helpful, hit the like button and subscribe. We'll have frequent videos on water investing and some of these overlooked opportunities, and hit the notification bell so you can catch that next one. Drop a comment with any questions or your thoughts on water investing, and let me know which of these stocks interest you most. Are you already invested in water companies? I'd love to hear about your experience. On the next one, we'll go deeper into water ETFs and talk about international water investment opportunities. Until then, stay hydrated.